Number 3, on 1 July 2018, ExpressFit obtained a loan from Investbank in order to finalize a lucrative investment project. The loan was for an amount of 5.5 million and 863,500 is repayable every 6 months starting from 31 December 2018 for the next 4 years. On 1 July 2020, ExpressFit decided to renegotiate the terms of the loan payable to maintain its liquidity. Now, I'm going to stop right there. On a new page, I'm going to indicate that this is my calculation number 4, and as always, I prefer to make use of a timeline. My first year end will be 31 December 2018, then 2019 and 2020. Okay, remember, what do we need to include? We need to focus on our equity and liability section. Now, when we look at this for 2019 and 2020, therefore, in terms of my timeline for 31 December 2019 and 31 December 2020. Now, this is a loan, guys. Therefore, liability, we will have to identify the current liability and my non-current liability at the end of 2019 and 2020. And guys, what do we need to identify? If there's any interest payable, guys, for the 2020 period. Okay, now when we look at the information provided, they've indicated to us that initial recognition date is 1 July 2018. Therefore, we will debit the bank and credit our loan with a 5.5 million. We have our payments being the 863,500, but we do not know what is the interest. Therefore, we need to calculate this. We know that the payment will be the 863,500. We know that our period will be 4 years. Why the 4 years? If we refer to the scenario, they indicate to us for 4 years. Let me just identify this, guys. For the next 4 years, and the payment is every 6 months, therefore twice a year. Therefore, 4 times 2, and this will be 8. Right. And then our present value will be the 5.5 million that they've received, and our future value will be 0. And we are able to identify that our interest will be 5.36 per payment, therefore times 2, and this will be 10.73%. Right. Okay, now we need to determine what is the carrying amount at the end of 31 December 2019. Now again, guys, I have a shop. If I look at my timeline, this will be the 3rd payment. Therefore, I will have to include 3 amort. And if I press amort, it will indicate to me the capital portion, then the interest portion, and then the balance. And the balance will then be an amount of 3,701,286. Now, I need to determine what is my current liability portion, guys. If I look at my timeline, I have now already determined my total, the 3.7. My current liability portion, which will be my short term, the amount that will be paid within the next 12 months. Now, if you are standing on 31 December 2019, your next payment will be the 4th payment and then the 5th payment. Now, we need to identify what is the capital portion included in each of these payments. Now, again, if I press 4 amort and I press my calculator, my first amount will be the capital portion, and this is an amount of 665,000. Then I include 5 amort because this relates to my 5th period. The first amount will be my capital portion, and this will be 700,664. Therefore, I have now determined that my short-term amount will be 136,664. Therefore, the long-term portion, guys, if you have 3.7 million minus the 1.3 million, this will be 2,335,622. Okay, so let's immediately transfer this to part A. I'm going to call this calculation 4.1, and calculation 4.2. Right, when you look at our liabilities section, I have included my long-term borrowings, calculation 4.2, the 2,335,622. Guys, if you look at our calculation here, the 2,335,622. And our short-term portion, which is the 1,365,664. And this is our current portion, calculation 4.1. Okay, now when we look at the scenario, the indicator asks, yeah guys, the loan was settled by issuing 65,000 non-redeemable Class A preference shares of ExpressFit with a fair value of 53 Rand each. Preference dividend payments are at the discretion of ExpressFit. Immediately we know that the shares will be equity. We need to include this in our equity section. I've included this, guys, our non-redeemable Class A preference share capital, 65,000 times 53, and this will be 344,500. Okay, next. Okay, so when we look at our timeline, remember they settled the loan here, guys, the orange, in the middle of 2020. Therefore, we will have to take out the loan, but we need to take out the carrying amount of our loan. Okay, now when we look at the timeline, what is the other thing you need to remember? That there will be interest for the first 6 months. Now we need to calculate this. Again, with my calculator, I will have to input 4 amort, and this will provide me with the capital portion, then the interest portion, and then the balance portion. Therefore, I'm able to identify my interest portion will be an amount of 198,500, and this is an expense, calculation 4.3. Therefore, I need to transfer this to my loan calculation, guys, in my profit, retained earnings. This is my interest expense, and this is my calculation 4.3, and this is an expense 198,500. Okay, now we need to take out the loan. Therefore, we need to determine what is the carrying amount. Remember, 4 amort, and then capital interest. My balancing figure will be provided, and my balancing figure is an amount of 3036286. Okay, now guys, in this scenario, they indicate to us that they settle the loan by means of issuing our preference shares. Okay, so if we look at a journal, we will have to debit the loan account with a 3036286. We credit the share capital 344,500. But what will happen with this balancing figure? Now, in terms of IFRIC 19, we will have to recognize this as an expense in our profit and loss. Loss on derecognition of our loan. Therefore, we need to transfer this to our profit and loss calculation, guys. And let's call this calculation 4.4. Just need to include here calculation 4.4. Right, and this is a loss of 408,714. Okay, if we refer back to our scenario, we are able to tick off note 3, additional information. This relates to our 2021 financial year, therefore not applicable. We only need to complete our template now. Okay, right, now when we look at our template, the only outstanding amount is still our retained earnings, the balance at the end of the year. And our closing balance of our retained earnings, 34796,353, and I transfer this to my template, calculation 1. Okay guys, we have now completed the section of the question. Let's move on.